Richard Gussow is senior analyst at DS Securities and Investments, joins us live now from Tel Aviv. So it's been a tough quarter for Israeli stocks, hasn't it? What gives you cause for optimism, though, when we look ahead?
Yes, hi, Marianne. Well, first of all, the reasons for the underperformance of Israel over the last few weeks or few months has been, in part, you mentioned the geopolitical situation. Those seem to have been easing a bit. We've seen, in terms of the regulatory environment, that was a tightening there. And basically, we have the upgrade of Israel to developed market, which eliminated the possibility of a lot of several emerging market investors to invest in Israel. So we've seen a reduction in foreign investors. Now, in the last couple of weeks, we've seen a bit of a recovery in the Israeli market, and that was really triggered by a bit of a lessening in the regulatory environment surrounding the banks. The capital adequacy rules were reduced in terms of being less onerous on the banks from what was expected, and that triggered a return of some domestic investors back to from the foreign markets to the Israeli market.
How much of a driver of markets are these bilateral tensions with Iran going to be in the coming year? If we were to see the situation under some control, yes, a bit of rhetoric back and forth, but no tangible signs that it could go beyond that, will these stocks be able to sustain some sort of rally?
Yes, well, if we see a lessening in the tensions, certainly the market, the investors will breathe a sigh of relief that perhaps any kind of military action will be at least postponed, and that will give some breathing room for stocks and for investors as well.
You mentioned foreign investors there, and some interesting figures coming through for the month of February showing that most of that foreign investment went into technology companies and service industries. Does there need to be more interest or more foreign investment in, say, the Israeli oil and gas sector as well?
Right. Well, the tech sector, we think, is relatively undervalued here. The valuations are attractive. The U.S., which is a major customer of the tech sector, the recovery there is also boosting, we believe, the tech sector. And in terms of oil and gas, right now we're waiting for a lot of news flow. Today, the Committee on Exports is expected to announce its recommendations. Also, potential new discoveries, potential of oil at the Leviathan prospect is also coming along in the news.
Just a very quick response from you on one stock that you think has upside potential. Ratio is an oil and gas exploration production company that controls Israel's largest gas field. But, you know, it's had a tough year in the market. So, I mean, why are you more positive?
Well, Ratio is a pure play basically on the Leviathan project. The Leviathan project contains 17 trillion cubic feet of gas. It's the biggest discovery, deep sea discovery in many years. There's also a possibility of oil there, and we think, first of all, that
yes, Ratio, as you say, that stock benefiting from one of Israel's biggest gas discoveries. Fantastic to talk to you, Richard Gussow. Thank you so much.